Do you want to start investing but feel overwhelmed by the risks involved? Or maybe you're hesitant about diving into the world of finance because you're not sure where to begin. What if I told you there are investment options that provide low risk, are beginner-friendly, and still allow you to build wealth over time? In today's video, we'll explore the top 5 smart and low-risk investment options that are perfect for anyone just starting out. You don't have to be a financial expert to get started with investing, and these strategies can help you grow your money with minimal risk. Let's dive in. 1. High-yield savings accounts. Starting with one of the most straightforward options, high-yield savings accounts are a great way to dip your toes into investing without taking on significant risk. While not technically an investment, these accounts offer a safe place to store your money while earning a higher interest rate compared to traditional savings accounts. They work much like regular savings accounts, but with better returns, which means your money grows faster, even though the rates tend to be modest. What's more, these accounts are typically insured by the government up to $250,000, so you're guaranteed not to lose your money. One of the best things about high-yield savings accounts is that they're completely liquid, meaning you can access your funds anytime without penalties. This makes them an excellent option for building an emergency fund or parking cash for short-term goals, such as saving for a vacation or a big purchase. You don't have to worry about your money being tied up for years, and the low-risk nature of this option means you won't lose your principal, even if interest rates fluctuate. However, keep in mind that inflation can sometimes outpace the interest you earn, so while you're not likely to lose money, your purchasing power could shrink over time. But for those looking to start saving and investing with minimal risk, high-yield savings accounts are an excellent starting point. 2. Money market funds. Money market funds are another great low-risk investment option, especially for beginners. These funds pool together a variety of short-term debt securities, such as certificates of deposit, CDs, and government bonds, to provide a diversified and safe investment. Since they invest in highly liquid and low-risk instruments, money market funds are considered a safe choice, but they tend to offer slightly higher returns than savings accounts. They are often sold by brokerage firms and mutual fund companies, making them accessible to new investors. The major advantage of money market funds is their liquidity. They offer easy access to your funds without penalties, unlike a CD that may require you to lock in your investment for a fixed period. You can typically withdraw your money anytime, which provides flexibility if your financial situation changes or if you want to move your funds to another investment. In addition, they're often used as a place to park cash temporarily while deciding where to invest it next. Although money market funds are generally safe, it's important to note that they are not FDIC insured like savings accounts, meaning there is a small risk of losing your principal if the fund's investments underperform. However, this risk is relatively low, especially compared to higher-risk investments like stocks. 3. Short-term certificates of deposit, CDs. If you're looking for a more structured way to save and invest, short-term certificates of deposit, CDs, are a solid option. CDs are offered by banks and typically provide higher interest rates than regular savings accounts, with the trade-off being that you must commit to leaving your money in the account for a specified period, ranging from a few months to several years. This makes them an excellent option for conservative investors who want the security of knowing exactly how much interest they will earn over the term, without the uncertainty that comes with other investment options like stocks or bonds. The beauty of CDs is that they are FDIC insured, meaning your money is protected up to $250,000 per depositor per bank. This makes them one of the safest places to park your money, especially for those who are risk-averse or want to preserve their capital while still earning a modest return. The guaranteed protection offered by FDIC insurance provides peace of mind, knowing that even if the bank were to fail, your funds are safe within the insured limit. While short-term CDs may not offer the highest returns compared to other investments, they're a reliable and safe option for those who want predictable growth. However, it's important to note that the downside to CDs is that if you withdraw your money before the term matures, you may face penalties, such as losing a portion of the interest earned. This penalty can vary depending on the length of the term and the specific bank's policies, so it's essential to choose a term length that aligns with your financial goals and liquidity needs. One of the advantages of short-term CDs is that they allow you to lock in an interest rate providing peace of mind during periods of fluctuating rates. This means that if you lock in a good rate when interest rates are low, you won't have to worry about rates falling even further during the term. On the flip side, if interest rates rise in the future, shorter-term CDs give you the flexibility to reinvest your funds once the term ends, potentially taking advantage of higher rates and boosting your returns. Overall, short-term CDs offer a safe, predictable investment opportunity with a guaranteed return, making them a great choice for anyone looking to preserve capital while earning interest. They are especially suitable for short-term savings goals, such as building an emergency fund or saving for a down payment. 4. Treasury bills, T-bills, and Treasury inflation-protected securities, tips. For those who want to invest in government-backed securities, Treasury bills, T-bills, and Treasury inflation-protected securities, tips, are excellent options with low risk. T-bills are short-term securities issued by the U.S. government, maturing in a year or less, and they are widely regarded as one of the safest investments available. Tips, on the other hand, are bonds that are indexed to inflation, meaning they adjust their value with inflation, providing protection against rising prices. Investing in T-bills is as safe as it gets. They are backed by the U.S. government, which has never defaulted on its debt. These securities offer low returns compared to stocks or other higher-risk investments, but they are ideal for investors who prioritize security and stability over high yields. The downside is that T-bills tend to offer lower interest rates, so while your principal is safe, the returns may not outpace inflation over the long term. Tips are a great option if you're worried about inflation eating into your investment returns. These bonds adjust their value based on the Consumer Price Index, CPI, ensuring that your investment keeps pace with inflation. While tips offer relatively low yields, they provide a unique hedge against inflation, making them a solid choice for conservative investors looking to protect their purchasing power. 5. Corporate bonds, investment grade. If you're looking for a way to earn steady income with a bit more return potential, investment-grade corporate bonds could be a good option. These bonds are issued by large, stable companies and are considered less risky than high-yield bonds, which are issued by companies with lower credit ratings. Investment-grade bonds are typically rated BBB or higher by major rating agencies, which means they are deemed to have a relatively low risk of default. Corporate bonds can be a good choice for investors looking for regular income. When you buy a bond, you're essentially lending money to a company in exchange for regular interest payments and the promise that your principal will be repaid when the bond matures. The risk with corporate bonds is that if the company's financial situation worsens, they may struggle to make interest payments or, in extreme cases, default. However, investment-grade bonds are issued by financially strong companies, so the risk is relatively low. One of the key advantages of corporate bonds is their potential for higher returns compared to government bonds or savings accounts. They offer a predictable stream of income, which can be particularly appealing for investors seeking stability and income without the volatility of stocks. If you're interested in adding a conservative, income-producing asset to your portfolio, investment-grade corporate bonds are a good place to start. There you have it, the top 5 beginner-friendly investment options with low risk that will help you take the first step towards securing your financial future. Whether you're looking for stability, income, or simply a safe place to park your cash, these options offer a great way to start building your wealth without unnecessary risk. Remember, every investment journey is unique, and finding what works for you is the key to long-term success. If you found this video helpful and you're ready to take control of your finances, be sure to like, share, and subscribe for more tips and strategies on how to invest smartly and confidently. Don't forget to hit the notification bell so you never miss an update. Take the first step today. Your financial future awaits. Thanks for watching. I shall see you in the next video.